Okay, welcome back to the next episode. In the previous episode I spoke about me going come talk about liquidity concepts, and here we are. Yes. Okay, when we come to liquidity concepts, you have always watched YouTube videos and you have heard about support and resistance. You have heard about double bottom, double top, triple bottom, triple top, and all those stuff, and how it works properly for most traders. Now, let me break this secret to you. So when we come to double bottom and double top, this is what basically happens. You are having price structure. Let's say you have price structure and you have price hitting hit the down, then came back to hit again, and then push back to the upside. Yes, it works. And some traders will call it the W and M patterns, right? So we have this type of patterns that practically work for a lot of traders. So let me draw the M. So with this, you have your W and M, which is basically a double bottom. You can see you have your double bottom here and your double top, right? Let me just give you an annotation. So here we have your double bottom. Double bottom, is it bottom this way? I don't know. Double bottom and then double top, right? So you have your double top, double top. All right. So with these two basics of structure that you already know, you have heard about, right? You say they'll tell you anytime price comes to the next end of another structure, it means price is going to shoot to the downside, and anytime price comes to the end of another structure, price is going to also what buy. So, and we have always heard about this thing, but what if I tell you that most at times price needs to go up, take liquidity, and then push to the downside? This is how it works. Assuming you are having price going to the downside, then you see price creating structure like this. Be careful, because when price breaks structure and it is returning, it is probably going to take your stop losses below here and continue to the outside. Let me explain. I guess you don't understand. So let's come to this particular structure here. When you see structures like this, there are a lot of buy stops and then sell stop losses lying above these places, and a lot of sell stop and then buy stop losses lying below these particular places, right? Why am I saying this? Because it is only going to repeat itself. Anytime people already know that price has it is support and resistance, and price is basically going to continue. Let me draw this line. So let's say you have this particular lines here, right? These two lines. Let me draw these two lines. And we have already been taught that when price hits this particular place, it means it is going to fall, and when he's here going to buy, here is going to sell, buy, sell, buy, then sell, buy, sell. Don't get me wrong, I'm not saying support and resistance does not work, but let's look at this concept quite severely. Most importantly, the market makers know that a lot of people are going to buy when price breaks out of this particular trend. Hence, they are going to say if price breaks, they are going to buy, comes to retest, and they're going to buy to continue the trend. And others are going to say we are going to sell, and then price will go and then come down and continue the trend, right? This is basically how they are going to have their understanding. So now, because they have this particular understanding, those buying, their stop losses are going to be below this particular structure, and those selling, so let me make this red, this particular structure, or let me make it blue as it is buy, and those selling, their stop losses are going to be at the top of this particular structure, right? Hence the reason why I am saying they are always going to probably be taken out. So now we know that price, people buy selling this particular structure, when it breaks out, their stop losses are going to be at the top here, and those buying, their stop losses are going to be stopped here. So let me just write it down for you not to forget, right? So we have, I'm going to put buy stop losses, buy stop losses, buy stop losses, and sell stops. So these are two different meaning, sell stops, right? So these are basically two different meanings. So let me do this 16, right? Or no, let me put it 20. Okay, so the 20 is okay, and this, right, white, so you can see clearly. And we also have here okay, we still have it there, sell stop losses, and buy stops, So we have these two things. If you don't understand what buy stops and sell stops are, so buy stop is basically when you put your trade entry. So let's say you have your trade entry here, and you are basically saying that when price, maybe price was at the when price comes, your sell stop, what am I saying? So let's say you have your sell stop below the trend right here, and you are saying that when price comes to trigger you and continue to the downside, making you profit. uh, and then when it comes to sell stops too, sell stops is basically you have your sell stop here, and you are saying when the trend comes from the downside is going to buy stop. Instead, this one is buy stop. It's going to continue tapping inside and going to continue to the downside. So this is sell stop and this is buy stop, so it is the opposite of each other, right? So now that you know what is sell stop and buy stop, so people will put their sell stops below here, saying that when price breaks out, it will trigger them into the trade and continue to the downside, and their stop losses will be here. Now the other way around, by those who want to buy, they will say that when they'll put their buy stops here, saying that when price breaks out of this particular range, the range which is right here, they are going to continue the trend to the upside and it will continue. So hence their stop losses are here. So let me just break this down, right? So because the composite man, which is the market makers, the bankers, the big banks that knows where the money goes, right? They know where the money is. They know that you're going to put your stop losses here and buy here, and then when you are, and they also know that when you are selling, you're going to put your stop losses here and sell this particular place. Hence they are always going to stop you out and go to the maintain direction. Now hence why I drew these particular things right here. So now let's look at this particular thing and let me explain. So we have sell stop losses and buy stop losses here, right? So basically price came and it is what, ranging like this, or you are saying okay fine, price I'm going to put my sell stop here and my stop loss here, so price is going to tap me into this particular trade and continue making profits. Now because they know that price has already broken structure, price was creating higher highs and higher lows, right? Now price created a higher high. Now price was giving you a pullback, so and we couldn't see that, but rather saw that price was what continued the trend to the downside because it is already ranging and it was pushing to the downside, hence another pullback. So price is basically going to stop you from this particular place, tap into an opportune order block, right? We have already learned about order blocks, and I will come to this. As I said, I'll be putting all this together and we'll practice it in a live chat as we go and we continue. So price is going to now tap into an order block right here, inefficiency available, and continue to the upside. Same thing applied to the sell opportunities. So now people know that, oh, price is going to the upside, it is ranging, so when it will break out of this place, so I'm buying from here, my stop loss is here. So you see from here the sell stop, your sell stop loss was here, and then your sell entry was here. Here in this case your buy stop will be here, and then your buy stop loss will be inside of here. Hence we have the bears and the bulls, right? So in this case it is a buy position, but you are seeing a sell position in a ranging market, and in this case it is a sell position and you are seeing a buy position in this particular case. Hence the reason why you're always going to be stopped out and market goes into the original direction. So price will come and stop you out of the trade, trigger into another order block which was already set by the bankers, and continue to the downside. That is why you always hear most traders saying that it's not about you knowing how to become profitable into the market, it's about you knowing where the forex market money is really lying down. So the monies are always lying down in a ranging market. So anytime there is a ranging market, I would suggest you always push and you stop trading inside the ranging market, stop putting sell stops and wait for the market to break out, giving you a reason to enter the market. So in the forex market, we don't predict forex movement, we actually predict we actually do what, react to what the forex market gives us. So hope you understand with this particular concept. If you don't understand, please make sure you practically give your reason into the group, and I'll be really waiting to answer and record another video explaining this in depth for the benefits of all of us and you too as well. So with this particular concept, I hope you guys understand, and so see you in my next episode.